Did the real estate market just tank in July 2026? Hey, it's Ryan Hodge, broker owner here at the Realty firm. Sandra, Tavares, and I have been operating inside of London, Ontario for nearly 20 years, selling real estate at a very high volume and supporting over 100 agents in the southwestern Ontario market. And our update for July is in. As always, if you are into really breaking down statistics and you like numbers and really going through the deep market research and data, I have created a separate video which goes really deep into the market. I'm a little bit surprised, I won't lie. Sandra and I have been extremely busy all year long, having one of our most active years in over a decade. Yet we know that many agents are struggling inside of the London market. We know that the market has shifted. We know that it has been operating in between that buyers to balanced sort of dynamic. And it's really time to look at what is actually happening. So in July, 686 homes changed hands via the multiple listing service. That's based on the London and St. Thomas Association of Realtors. And although down 4.9% from July 2025, the year before, the actual sales activity is on par with activity recorded in the past 4 years. So not that bad. The marketplace is starting to see a little more certainty around interest rates, with the Bank of Canada maintaining its policy rate at 2.25% last month, which has been consistent over the last number of Bank of Canada interest rate holds. With historically high inventory, it's setting the stage for a busier fall market. July saw 4.9 months of inventory, with 3,367 active listings across the LSTAR region. So the July sales to new listings ratio was 44.5%. That's up from June, which came in at 41.6%. Remember that a balanced market falls in between 45% and 65% of all new listings to sales in terms of the ratio. So we have moved from earlier this spring, which was, a real buyer's market, so to speak, to now bordering into what, all things considered, is considered more of a balanced market. That's a really good positive sign, and I predicted it. I predicted it over the last couple months, that based on the activity that I was seeing, that I was experiencing, that Sandra and I have noticed in our own personal business and with all of our members and our real estate board, the doom and gloom that we were seeing earlier this year was 100% going to shift into what we look at as more balanced. Now, I will disagree with the statistics, because I do see that we have had a delayed spring market as well. I feel that with the real tough and treacherous winter that we had, the market into the spring was delayed, showing that, all of a sudden we're moving into more balance. But I believe as we head into the fall, and if interest rates stay the way that they are, I think that we will stay into that more buyer side versus an actual balance side. Nobody knows until the entire end of the year, but I wanted to give you my perspective on that. So average sales price has dropped $603,006, which was on par with June for $614. But overall, from a year ago, it has certainly dropped. I've got some key stats for benchmark price. Central Elgin, $640,200. London North, $621,000. London South, $556,300. Middlesex Center, $775,700. So that Dorchester, Thamesford, all of those areas are still doing very, very well. St. Thomas, $506,500. Strathroy Caradoc, another really interesting market to watch at $726,700. The LSTAR HPI benchmark price, which reflects the value of a typical home, is assigned by buyers in a certain area based on various housing attributes, was $557,000. Now, July average, Central Elgin, $645,374. London East, $456,416. London North, $701,759. North remains the highest outside of Middlesex Center, which was $844,452. St. Thomas, just over $500,000. And Strathroy Caradoc, average sale price $548,041. The average LSTAR which is London and St. Thomas Association of Realtors price, July 2025 was $603,006. So what you will see for a lot of these is decline. The single family properties, which was the change from July or June 2026 and April 2026, is down 1.1% over June. One-story homes down 2.2%. Two-story homes down 0.5%, so still the more active. Townhomes down 1%. Apartments were actually up 1.8%. Interestingly, I am surprised, but I also had multiple offers on a condo that I've got listed last night. We had 3 offers on a listing. It's conditionally sold well over asking. So when you look at what's going on in London, I think that it's really important to understand that you're always going to get stats. You're always going to get to understand the market, especially through us and how we do things. But what you want to make sure of is that if you're buying this year, massive opportunity for buyers. If you're upsizing, if you're looking to make a move to another city, if you're a first-time home buyer, I think there's some great investment deals out there as well. Buying is still a very, very real opportunity in what's considered still a buyer's market. If you're selling, I think that people are having some tremendous success. Sandra and I have not had a single listing so far in 2026 that has expired, but we are doing deep market data and really, really having tough conversations, but productive conversations with our clients, which are our sellers right now who may not have sold quite yet. Because as we move into the fall market, the last thing that a seller wants to be doing is, number one, expiring. Number two, not getting any action or activity on their property. Or number three, chasing the market downwards. And I think that that's where you'll start to see the real shift happen as far as numbers go. My prediction is that we go back into what's considered more of a buyer's market. And when the 2026 ends at the end of December, and all the stats are in and all the stats are analyzed, I think that this was a year of the buyer. However, I think that the sellers that are doing their deep market research, that are getting a licensed realtor with really strong experience that will interpret that research, do that research for them, provide them with data, provide them with 4, 5, 6 different approaches to value versus just looking at comparable sales or statistics. I think that the sellers that get those people involved in the sale of their property, listen, make informed decisions, are going to have tremendous success and really, really take advantage of this market, especially if they're then buying, whether they're moving up, whether they're moving down. I think that there is some prime opportunity here inside of London and St. Thomas. That is the July numbers in a snapshot. That's a little bit of my analysis of it in my nearly 20 years moving through multiple markets inside of London, Ontario. And I want to share with you that if you are looking to buy, sell, invest, or build new construction, we are always open and available for a free, no obligation conversation. Our mission inside of the London and St. Thomas market is to help people before, during, and after the sale. And if we can give you any insight that helps you, whether you work with Sandra or myself at all, we are always open to do that, and we want to support you in getting from point A to B. It's not a tough time to sell, but it's a tough time to sell if you're not getting the right information and you're not getting the right data. Reach out to us anytime, www.ryanandsandra.ca. Give us a phone call, 519-601-1160. Be sure to check out the real deep dive on all things statistics in a separate video or on my blog. And if you enjoyed this content, be sure to like and subscribe. We hope you have an amazing August, an amazing wrap to the summer. We'll continue to provide you with insight data, all of our normal updates. And if you have any questions, let us know at any time.